What's up, guys? Chimp here with another market update, and I want to sort of just sit here today and go over some of the reasons, that I have at least listed for why to be bullish, why to be bearish, and why I'm still, leaning bearish um in this market, and why I don't see a reason to change that view. But I'm gonna give you both sides, and ultimately, like, anyone listening can take what I have to say and add reasons or subtract reasons or balance them in order to decide for themselves, why they should have a certain bias. So before I get started, actually, let me how do we don't need this tab. Anyways, let's get started. So, you know, let's start with the bull reasons. The number one bull reason I've been hearing the last 2 to 3 days or so is like, look, we're basically at prior resistance, and now it's like resistance turned into support, and so this is like a very natural place for us to bounce. Valid argument, totally valid argument. And from that perspective, right, like, if you were looking for a breakout and a reset, this would sort of be the area to do so, right? Like, reset sort of like at that resistance turn support, and then the markets, had about close to 2 months, besides like this 124K aberration, basically like a pump, and then a sell off into this support, and maybe we get this breakout. So certainly, that's one of the strongest bull cases. The next one that I have is, you have a second wave of crime money that's come in. And so, when Trump, maybe I should even say a third wave. When Trump got elected, you had a lot of money that came in, a lot of chop, euphoria, etc. And then that, you obviously ended up getting a washout. And then now we've had sort of this second wave of it, second wave of speculation, second wave of fraud money. And so the argument is like, look, this is just a continuation of this wave, or maybe you get like another wave of these buyers coming in and just top blasting, right? And basically just saying like, screw it, the Trump family's long, the Trump family's bullish. I'm going to also maintain that same view. The third reason I have, which again is a valid reason, is hey, look, the Fed's going to cut rates, right? And that's what I was going to pull up, and then I ultimately didn't. But I'm just going to look at it in a different tab. We look at the probabilities, right? The market's pricing in that by December we're probably going to have 2 cuts, and by July of next year, so basically less than a year from now, we're going to have 1, 2, 3, 4, about 5 cuts, right? So if you look at it from that perspective, like, the market's pricing in quite a few cuts. And so you could say like, look, rates are going to come down, like short-term yields are going to come down. People are going to need places to put their money, right? And so again, very valid reason. Another argument, hey, ETF flows have slowed down for the last 2 months. They might just pick right back up again, right? And let's combine this with the fact that, like, if the stock market keeps going up, yeah, ETF flows could easily reignite and push another, we got like 15-20 billion dollars worth of flows that came in. Hey, maybe we get another 15-20 billion. And if that happens, like, yeah, we're going to go and break 124 easily, right? And lastly, and again, there's obviously other reasons you can add to this list. I'm clearly not comprehensive, and if you have other reasons, please post them below. Clearly you're seeing some more shorts coming in, and I don't know if you guys remember some of the videos that I did in the past where I was like, look, there's really not many shorts till like 125. Clearly there's way more shorts now that have liquidations. Like, it's still kind of a handful, but even all the way up to 120, you're seeing like, close to 4,500 BTC worth of shorts that could get liquidated if we end up pumping. And so when I look at the market from that lens, it's like, hey, like, and you have like some people, people were doing this on the long side, obviously. You have like, some random short. This guy got partially liquidated earlier today, who gets licked at 112, 113. You have a big guy who gets liquidated at around 115.5. This lick map's a little bit off. You have a bunch of these smaller positions, in the 100 BTC range, which get liquidated sort of in this like 114 to 115 area. And so when you look at all those, you could say like, look, there's actually some shorts in the market. Like, it's not too many, but there are some shorts. Now, those are sort of the main reasons I have for the bull case. And I think, like, there are valid reasons. And if you guys have other reasons, you can add to them. Now, let me talk a little bit about the bear case. The top reason I have for being bearish is, one, we know there's no more treasury bid, right? Like MicroStrategy is basically tapped out. Metaplanet like somehow got to their 20,000 BTC mark. They're probably tapped out. David Bailey's obviously tapped out. Trump bought Bitcoin with the money he raised. Like all these people basically raised money, bought Bitcoin, and now they can't seem to get their hands on more money. Like if anything, I think GameStop's the only one that raised money but didn't fully deploy. And I don't think they ever said they were going to use all that money to deploy into Bitcoin. Obviously, they bought like $500 million worth, but there's no reason they have to deploy all of it. So I don't know who the next top blaster is, right? Clearly, like two of the main sources of flows have been ETFs and treasury buyers. And so like you slash one of those and you say, hey, like you're guaranteed to not have this person. Like, can we rely on that ETF arm or like the discretionary like crime arm to raise it to bid us up? I don't know. Also, like you've seen a lot of these speculative alts that pumped start to already die off. So last cycle, and I shouldn't even say last cycle, but back in December, like you basically had some of these alts get a second wind, like Whiff, right? Whiff got a second wind. It even got a little mini pump on that, like in December, and then it just sort of died off. And like Whiff is one example. You had alts like Moodang, right? Like these alts basically pumped and started their descent way before Bitcoin eventually started like its terminal descent. And you've seen that similarly like now, right? Like the two hottest alts, and maybe I'm forgetting something here, but like SPX, right? SPX clearly topped like late July, and it's already started its descent, right? So the most speculative shit's already sort of shredding. Fartcoin, another example of that. Clearly shredding. Pumped, dumped, chopped around, and now like shredding back down. So kind of similar pattern there, where like the highest beta bullshit starts to die off, as eventually, like in my opinion, it's gonna lead to like the larger assets dying off. Another thing, everyone's looking for the obvious bounce, right? And you might get it, right? Like I'm not saying you don't get the quote unquote obvious bounce. Let me put the Coinbase one. I think that's the one we're using. Right. So like at 112, that was the prior high. We got an obvious bounce, and we bounced all the way actually to a new all-time high. The difference, in my opinion, is like here, and again, like I could be wrong about this. You had like one wick that was bought up in July, and then it sort of just chilled, and then we kind of had like a breakdown, and then like that was clearly the bottom, and we started rising. When you look at the market now, it's been a little bit different, right? Like you've had like these situations where you get a couple like lower lows, every day is almost a new low, and then you get this big squeeze, and then like it fades, right? And you get some new lows, right? Like you look at these candlesticks, one candle and the next candle slightly new low, and then like you start climbing again, and now you fade again, and then similar, like these candles are all sort of making new lows, like just slightly, and now you're getting this other bounce, right? And so you're just getting this bleed. It feels like you're getting this bleed off pattern, and again, like I mentioned the bullish reasons, like hey, maybe this thing does squeeze up. I would be very surprised if we end up getting all the way to like 118 or 120. I think like two major resistance areas would be something like this and something like this, but I don't even know I don't know if this has the potential energy to get all the way up to that Fed pump level, the FOMC pump level. So if this thing has a lot of potential energy, maybe it makes it back to like 113, 114. But everyone's looking for this bounce. Like we're just slowly getting this bleed off. We're getting some squeezes, and it kind of reminds me of like the bleed off we had here, right? Like in this case, you had some more violent sell-offs actually, so it's a little slightly different. But once the market printed the SFP, which by the way, it printed the same pattern here, right? Printed the SFP, just sort of started bleeding off, like, and kind of mercilessly, and then we ended up dumping, getting a squeeze back up, chop solidation, and then like it actually broke down. So I don't know, kind of feels similar to that in some ways. Like I remember you had a similar pattern, back in like June. Obviously, like this culminated with the Germany selling, right around here, and then here. But like you had this pattern where it's just like a slow bleed, slow bleed, slow bleed, some squeezes, but eventually like it just broke down. I don't know. I just don't. Every time I open CT, I just see like, hey, like Bitcoin's at this level now. This is a reason why it should be like support, right? Like people were saying 112 was support again. And then people were saying like, 109, 110 was support. And then now people are saying 107 support. Like if this breaks down again to 104, right? Are people going to say that's support? If it breaks down to 102, are they going to say like, oh, look, like there's a big horizontal support level here. You got to buy this, because it's going to bounce, right? I don't know. Like seems like everyone's always looking for, oh, this is the support level to buy. And you do get a bounce sometimes, but it's short-lived and ultimately you go lower. Another thing, like I mentioned this in my prior video, when Bitcoin went to 112 the first time, Solana, absolutely got shredded, right? It went from 205 to 156, right? So huge drop. So now Bitcoin's lower, right? It's at 110.5. Solana's still at 200, right? So like when I like, and one of the reasons I like looking at Solana, is because I think there was a lot of parasitic and frothy activity that was sort of that took place over this layer, this L1. So again, like if I saw Bitcoin at 106 and Solana sitting here at 160 again or 140, I think my tune would be very different. But like I'm looking at something like a Solana and I'm like, okay, there might be a treasury bid coming. That's definitely possible. But I just don't like the fact that these coins are sitting way higher than they were. Like I'm thinking about this in terms of like, hey, the market has to try to support Bitcoin and try to bounce Bitcoin, but now it has to also try to hold Solana over 200, right? And like, you can pick other coins as well that are elevated, like XRP or whatever, right? Like obviously XRP hasn't performed nearly as well. But you have XRP at like still at 280. You have a lot of these basically scam coins that are still sort of elevated in my opinion. So it doesn't make me feel good when I look at Bitcoin and it's making a lower low, and I might look at Solana and it's just chilling there. Like from my experience, I remember this happening a lot in like January of 2018, and it didn't end up doing so well. Again, like also another reason. By the way, actually, let me say this first. Like now you have people talking about the Sol treasuries, etc. First it was Bitcoin, now it's ETH, now it's Sol, right? Like the shiny asset isn't really Bitcoin anymore, and that's another issue, right? When people start to think like, well, I can get better returns, like it's time for me to just pile into Solana because this thing's gonna outperform. Like that's sort of the beginning of the end, because then Bitcoin loses sort of its native bid. Another reason, I think longs are still way more overexposed than shorts, and I talked about the fact that there are some shorts that are vulnerable in this market. But let's see if this can load. If it doesn't, I'll just talk to it and I'll tell you, go to hyperdash.info/terminal. You can find this exact info. It doesn't look like it wants to load. Oh, maybe it did this time. Look. Longs are like, just zoom in, right? Like again, you have some shorts here, but overall, like you look at the distribution, right? Like you look at the cumulative distribution, you go to 120, it's about 4,500 BTC. I guess it's like symmetric in some ways, but you like overall you have way more longs, right? Like you look at the tails of these distributions, barring extremes, like longs are more exposed, and it's not just Bitcoin, right? Like pick an Ethereum or whatever, like these curves go up way faster, much more, like a Solana, right? Like very similar. So I still think longs are more exposed, and like you look at something like global open interest, again, still at like 98.5 billion. Like I said, last time Bitcoin was at 112, it's at this was at 98. Back then it was at 88. Last time Bitcoin was at 107, 108, 109. It was at 70 billion. So Definitely a lot more leverage in the market. Definitely a lot more leverage in the market. And so you have a lot more that traders have to try to hold up if they want this market to ultimately pump. Lastly, I want to talk a little about rejection zones and SFPs. And let's see, switch back to Bitcoin here. This is something that you see sort of at tops and bottoms, and it's rare, and you kind of have to like work through it more logically than anything else. But I like to look for areas where the price goes, but it can't really stay above or below it for very long. And to me, like 80K was that prime example where I'm just gonna draw a little rectangle here. Like price could dip below 80. Yeah, maybe you take like the first time it went below 80, auto bounced, right? Second time it went below 80, auto bounced. The third time maybe it spent a tiny bit more time, but basically it just couldn't stay below 80, right? And when you draw a line at 120, it's like the same exact story in reverse. Like, the first time we went above 120, auto reject. Second time we go above 120, auto reject. The third time, we climb a bit more, print an SFP, similar to here, reverse in the reverse, right? Like SFP, SFP. Here we go up, print an SFP, and now it's just started this like terminal bleed. And by the way, an SFP is ultimately what started this like terminal pump. Now, so I don't know. To me, like 120 is a pretty clean rejection zone, or has been trading as such. And so that's again another reason why I'm bearish here. Lastly, I just want to answer a quick question. I'm forgetting the guy's name, but he was on my Twitter. He asked me, why does open interest follow the price of Bitcoin? Maybe he said maybe it's my naked eye or whatever. Look, it's because open interest is correlated, right? Like if no contracts opened in isolation, let's say this is only looking at open interest for Bitcoin. If no contracts opened or closed, if Bitcoin goes up, open interest should go up the same percentage, right? That's why I like to look at open interest versus where Bitcoin was in the past. So like I'm looking at the deltas, right? So for example, like, hey, Bitcoin is at 113, 112, open interest is at 88 billion. Now it's lower and open interest is still close to 100 billion. Okay, that seems like there's probably more leverage in the market as a result. So that, or open interest was at 70 billion the first time around. Now it's at 98 billion. So I like to look at those those deltas in terms of like trying to judge how leverage looks. So look, ultimately I still lean bearish. I could play the both sides of the coin argument and say like, hey, there's no buyers. I think that's pretty valid. But I could also play the argument and say like, look, there's no sellers. Who's the marginal seller here? Ultimately I still lean bearish. I think we go lower. And I'm not in a rush to margin long. I think that there's still room to go down. And we just have to play this sort of one step at a time. So that's my views. That's how I feel about the market. Obviously, if you guys have any opinions, you disagree, you have other reasons to be bullish or bearish, post them below. More than happy to hear them. But I just figured I'd put this out there and, turn it into a bit more of a brainstorming slash, what's the word I'm looking for? Play both sides of the coin argument here and see how it goes. So anyways, we'll see how it goes. We'll see what the market does. We'll see how much legs this bounce has. Clearly, we're at 100.5. If you look at things like order books, liquidity is pretty low. Actually, when I look at order books, there's more liquidity on the bid side. I mean, that has been the case on the way down, the entire way down. So how much you read into that is obviously up to you. But not like there's an insane amount of liquidity, like pumping $1,000 or $2,000 or $4,000 wouldn't be like the most surprising thing in the world to me. So we'll see what happens. Crypto tends to surprise on both ends. So anyways, guys, until next time, take care.